I'm Alexis Kahn from Chelsea Groton. I'm the cash management sales manager, and this next module is on banking services.
You can, yep, there you go.
So essentially, I'll just go through this really quickly, but the main points that I want to get across tonight are essentially why you need, what's the why behind having a separate business account, especially once you're getting started. You might say, well, I already have a bank account. Why do I need to have this separated in a business bank account specifically? So I'll go into the why behind that. Different account types. There are different designations for different accounts that are business specific. Some of the services that are available sort of to keep in mind as you grow your business. So a lot of them won't be applicable at the beginning when you first get a new account, but they're kind of good to be aware of as your business grows, because you want to be able to really establish a relationship with a bank and a particular banker or a group of bankers, so that you can ask these kind of questions and be aware of them as your business grows and as your needs change. And then we'll go into some of the other considerations. Really fundamentally, I'm going to talk a little bit about security, because this is applicable to all bank accounts, but for businesses in particular, especially if you're growing and you're having other people kind of touch your account, whether it's an online banking, you want to be really mindful of the types of security measures you want to take, because this is of paramount importance in kind of today's day and age of cybersecurity. So I'll just skip through this kind of quickly. I'm going to try not to, really read off the slides too much. So I just want to kind of get through the first section. So the thing about a business bank account is fundamentally at the basic level, it's not really any different than a personal account from the standpoint of, when you're thinking about a checking account, if it's for your personal needs, you're taking checks in, potentially you're getting direct deposit or, money coming into your account, usually through your paycheck. And then obviously all of your expenditures, whether that's through your debit card or through different bills that you're paying. So a lot of those are very similar in a business checking account. It's not a completely different, thing altogether. It's the same animal, but really it's, so when you're looking at different account types, it's just a matter of there's different tiers based on what kind of needs you have. So at the fundamental level, it's going to look a lot very similar to a regular personal account in terms of what comes in and what goes out. Obviously the difference being it's not a paycheck coming in, it's usually through what you're selling. And then savings account, it's the same thing. You can have a business savings account similarly to a personal savings account. It's the same kind of thing. So these products are fundamentally the same, but it's just a matter of really understanding what suits you best for the different stage that you're in. So at the basic level, what I really recommend is that anywhere that you are, when you're kind of at the point at which you're looking for a bank account for your new business and you have all your documentation and you know exactly what you need, I would say when you're kind of doing your due diligence and looking at the different banks in your area and what their offerings are for businesses, my kind of two pieces of advice are to at the basic level, they really should have a free checking account type. I mean, there's different qualifiers, but essentially when you're at the base level where you're just opening, you're in a startup mode, there should be an account type that enables you to do your checking without any kind of service charges, because usually your transactions are low enough where you shouldn't kind of have to pay for anything. So I would kind of, that's my first tip. The second tip is really understanding if that bank has the ability to accompany you as you grow. So for example, you might have your personal account with a bank that's right around the corner and they've been your bank for 30 years and you've had a wonderful relationship with them, and that's great, but maybe they're not really a business bank. Maybe they are really geared towards more personal banking. And then the challenge just becomes, you could certainly open a business account with them, but then the challenge becomes, as you grow, are they going to have the capabilities and sort of the capacity to really meet your requirements? And then are you having to switch your bank account, when you're already kind of up and running and you have everything flowing in and out, it becomes much more complicated to move. So those two things, certainly convenience is important to some businesses, but with a lot of the different capabilities and services that we have, I mean, when you think about your personal account, the fact that there's a mobile app to take pictures of checks, and now in a digital age, there's fewer checks kind of as part of most businesses anyway. So, the having the branch right down the street is important to some people, but may not be absolutely necessary and may not be of the utmost importance when you're kind of picking your bank and which bank you want to establish a relationship with. Obviously, in some cases, it's going to be if you are needing a loan at the right out the door, whether you have a bank that is able to work with you there. So that might be a factor, but I think it's really important to kind of consider whether they have the ability to accompany you as you grow. So that's kind of I would say the thought process behind exploring, what bank you would choose. Obviously, things like what is their customer support like? Is it somebody that you'll have a dedicated business line? Is that an outsourced service where you're going to have to be on hold for a really long time? Asking those kind of questions about, is there a point person for your relationship or a team that handles businesses strictly, so you have kind of a subject matter expert, and is that person or team going to be available fairly readily and not putting you on hold for 20 minutes or while you get routed through a bunch of different numbers. So those are the kinds of considerations, because it does look very different for business accounts than for personal accounts for some banks. Then the other thing that I would kind of recommend, so we went through choosing the right thing. Another consideration that is also a really good question is what kind of funds availability policy the bank offers for businesses. It can look very different than personal accounts as well. So that's a good question to ask, because you think about cash flow as being so important for your business, and you're having client payments come in and you're having expenses that are going out the door. If all of a sudden you're getting holds on, either if it's checks coming in or credit card processing holds, that could have a really impactful repercussions for your business. So that's a good question to ask. Some banks make checks available same day, some put larger holds. So that's a really good question to ask kind of right out the front end, because it could be very different than a personal account, for example. And I just wanted to kind of first also address the question of why have a dedicated business account versus a personal account. Anecdotally, I will say I've had customers that when they first established their business account way back when, it was probably a really small account and it was a long time ago, they established it as a personal account type, even though it was for a business. And then it becomes complicated when they become more complicated, because now it's maybe not as simple as a simple switch to a different account type. It's opening an account that's new altogether. And again, that has a lot of fallout when you think about changing things over. So really, if you just start off the bat in a business account type, it's going to make your life a lot easier down the road. Also, when you think about, why not just keep, especially when if it's in the beginning stages and you're just getting started and you think, I'm just going to run things through my own personal account. This is too small to really establish my own separate business account. The problem becomes it has, several important reasons. First of all, if you think about, just bookkeeping, if you think about having to parse through all of your own personal bank statements and pick out and kind of decipher, what was a business expense, that has tax repercussions, because when you're filing your taxes, a lot of those things are going to be able to take deductions for. I'm not an accountant, so I can't advise on any of that, but, fundamentally business expenses can, have some benefit from a tax standpoint. So you want to be able to really account for those very closely. And what better way than having it all all separated so that you don't have to decipher or miss anything that could have been in your personal statement. Also, when you think about, during that tax time, you're giving everything, handing everything over to your CPA, for example, do they want to get handed a stack of all of your personal statements and try to, figure out your chicken scratch circling of this is my business expense, or do they want to just look at dedicated statements? The other nice thing, and this is kind of introduction to what we'll talk about a little bit later, but you can have within a business account entitlements that give access to different people with different levels of access. So for a CPA, for example, you could give them an dedicated online access through business banking online so that they're just accessing only your statements, for example. So you wouldn't even have to send them statements. They could just, whenever they need to, go in and access those statements online. And so think about that, you couldn't do that if it was a personal account. The other thing is from a liability standpoint, and I know in I think a subsequent class, you'll find out about, what kind of legal entity to register as, and there's definite benefits if you are limited liability company, for example. And so if from a liability standpoint, if you're having your assets really separated in a totally different account, that's could be helpful as well if you're an LLC. The other thing is just optics and brand. If you're, let's say, cutting a check to a vendor that's has your own name on it versus the name of your business, or let's say a corporate credit card or something like that, if it says just your name without a business after it, is that vendor going to view you as with authority and with the credibility as if it's a legitimate business that has, a business name on the check. So, you might be able to develop a better relationship with that vendor as a result of being, a bona fide business. So those are kind of some of the main reasons, just kind of off the top in terms of why it's really important to just establish a separate account, because it can be really tempting to just keep everything, kind of in the beginning running through your personal account. A couple of quick things, I kind of alluded to this earlier, but the difference between, kind of your basic free account, which should, you should be able to find at a bank where you establish your banking relationship. Usually that's set up such that there's a maximum number of transactions that can run through the account in 1 month. So that's really like you are allotted X number of transactions, and as long as you don't go over that, there's no fee, no monthly maintenance fee, that's waived. And there's different levels, maybe it's the next tier up is a certain number of transactions, which is higher, and the service fee can be waived as long as you maintain a certain average balance. So those are usually the first few tiers are based on an allotment of transactions and balances that can basically waive service charges. For some banks, there's other factors. So they could say if you, do a certain number of direct deposit into the account, then you can have your service charge waived. There's different criteria, but those are kind of the basics. The next tier up, which is kind of considered more of a commercial checking account, I won't get into this too much because it gets a little bit more complex, but essentially the concept is that everything is itemized in terms of transactions, but this is really where you have the cash management services that themselves have fees associated with them, but that can all be rolled up and sort of offset based off of the average balances that you maintain. So it's essentially, instead of just sort of an allotment, and then if you have balances that are X, then you don't pay it. Rather, it's more of a dynamic calculation, and you can potentially offset or fully absorb the cost of certain fees that you might layer on to your account based on your needs and based on wanting to take advantage of some of these capabilities, but you might not pay for all of it, or even you might be fully waived just by virtue of the fact that you have these balances that you're keeping with the bank. So that gets a little bit more complicated. Really don't need to look at that until your business is a lot bigger and layering on a lot of cash management services, but it's nice to know that that exists, because it's a totally different account type than, you wouldn't want to walk in day one of owning your business and say, I want a commercial checking account, because you're going to end up paying probably more than it's worth versus, just kind of the cheap, the free basic account type. It also can get a lot more complicated, as this sort of alludes to this slide. Once you get larger, and this is kind of where I was saying, keep in mind that this exists, but you can establish full account structures where you have, different layers of accounts where separate accounts are just say to do your payroll, and but they zero out at the end of the day and everything sweeps to your main checking account. Again, this is kind of too complicated for the sake of this class, but you can at the point at which your business really grows, you can structure things so that there's a lot of added protections, so that certain accounts, maybe you only want to give your account number to a customer who's paying directly into your account. You only want to give them an account that's kind of removed from the account that has all the money in it. So you're sort of separating that out. So you're giving your account number to an account that for them to pay that has no money at the end of the day, and you're kind of protected through that. So there's a lot of different things that you can do through zero balance accounts and all of these sweeps that can optimize not only your liquidity, your interest that you earn, and can offer certain protections as well. So these are kind of things that, again, you as you grow want to kind of keep in mind. The next slide we already talked about commingling. It's also important, just sort of as that slide mentioned, that let me go back. You want to make sure that you can, in some instances, and this is dependent upon your bank and as well as how you're structured in terms of ownership between your personal accounts and your business. So you can set them up oftentimes so that they are under the same online banking profile, but you really, I would say, consult with your tax accountant or some sort of CPA in terms of transfers. So you might say, oh, I want to take, some money out of my business. I've built up a balance and, time for me to get paid off of this business. Just be careful. The paper trail is really important between transfers between your business and your personal account. So don't just do it willy-nilly. I would say it requires some vetting through somebody who's much more educated on the topic of tax than I am. So just make sure that that's kind of consulted with a tax attorney. So account access, I mentioned this earlier, but basically here it's important that that with a business account usually gives you this option to have entitlements. You can add, let's say your sister is your bookkeeper, or I have a customer whose granddaughter does all of his bookkeeping because he's not as, you could have anybody, and that person could be very trusted. And that's where we run into some problems, because you might think, oh, this is my granddaughter. This is not some random person off the street. And they end up using the same user ID and password as their own user ID and password to access their business account. And you think, well, she's not going to go steal my money. This is my granddaughter. But the problem is that from the bank's perspective, your login is your login. So if she calls and says, I'm locked out, we're not going to be able to help her because she's not on the account in any way. The entitlements really allows you to set up very easily another user that can have full reign of all the access, or very limited access to certain things, like maybe just transactions, or maybe just be able to make deposits but can't see any account activity. But that can be very closely controlled by you. And then if that person has a problem with the account, we can identify them and say, okay, you're allowed this access, and we can give them that information directly. So as you grow and you're really delegating, it's really important to kind of keep in mind that that entitlement functionality works and really how to use it correctly. I have one customer, for example, when you think about, again, layering additional services like online wire transfer, and they were trying to use, the same login for initiating wire transfers. And you think, oh my gosh, this could go just so awry if you're sending money out the door, it's gone, and you're using, this, nobody can identify who actually did it because you're all using the same password, login ID and password. So it's really important just from the beginning, even if it's a trusted person, to set up separate online entitlements, which exist for business accounts, which is a really great thing about it. Savings and CDs, again, it's the same kind of thing. It's nothing new or different than a personal savings account or CD. They're actually, the rules around the number of withdrawals have loosened through COVID. So it's not the same. It used to be 6 withdrawals per month, and that was very strict. Now it's a little bit looser, especially with any kind of external withdrawals that are electronic. I would say fundamentally, though, what you still do not want a savings account, even if the rules are a little bit more lax. You do not want a savings account to be used as a transaction account. You really just need to be in a checking account, and really think about your savings account as you're squirreling some money away for a rainy day. This might be you're going to have to make a big tax payment at the end of the year, or you're going to make a big distribution to yourself because you've had a great year, and you want to just kind of keep it there. Maybe you're purchasing some equipment or putting a down payment on a building to buy, or your warehouse or something like that. Like, just think of it in terms of squirreling it away and sitting on it. Don't and you can do transfers in online banking between that checking and savings account, but it's not really meant to be a transaction account, even if the rules are a little bit more lenient. So we talked about a little bit about some of the services. Payroll, this is a big one as you start to get to the point where you have employees. Running payroll, it can be a really, really complicated thing that most people don't advise that a business owner try to figure out on their own. Usually engaging with a payroll service is best practice, just because when you think about all the different tax payments and withholdings and things like that, it gets really complicated, and you can make a mistake that could have really bad implications for your business. So there's many different options when it comes to payroll. We have just launched a new service where we do offer, we do offer payroll in-house. It's through a partner of ours. So, you can get it, in other words, through a bank directly. And so that's one question that you might want to ask your bank directly, is whether they offer payroll services. But also, when you are kind of starting to work with a tax accountant, you might want to talk to them about whether they offer payroll services, because a lot of these accounting firms also do that as a paid service that's separate from just running your taxes at the end of the year. So that's a good question to bank or accounting firm, talk to them about those. I would recommend going that route first. You could certainly do some shopping. Everybody knows like the big payroll providers, so they've certainly have a lot of expertise in the area, but you might want to work with somebody that has more of a link with your business, rather than a totally separate party that you're adding another vendor that you have to work with. So bank and accountant are kind of a good way to start. And actually, I will just mention anecdotally, because we just have this new service. Another benefit to working with like a bona fide payroll service, especially one that you could kind of close contact with, is that there are all these tax credits, particularly kind of since COVID, that you really don't know about unless you have somebody advising you about it. So that would be a question to ask your payroll provider and your accountant, for that matter, of, are you taking advantage of all, from a payroll perspective, all the tax credits that are available to you? We were hearing one customer that was depositing a check for like $65,000 for their business because of this one payroll related, no guarantee on the amount, but there's a lot of programs out there that you just want to make sure you're taking advantage of if you are having payroll employees. Again, these are just kind of a few cash management services to be aware of. A lot of these are for much larger businesses, like lockboxes, when you have thousands of checks a month. So that's not really as much of a common thing these days as it was in the past. But I wanted to specifically make a call out for Positive Pay, because we have services that are specifically geared towards fraud, and that is something that has become much more of an issue since the start of the pandemic, and even more recently. I mean, it's just been crazy the amount of fraud that we see. And so it's, I would say, really important to talk to your bank, especially when you're establishing a new business account, about what kind of protections they offer on the fraud side, what recommendations they have in terms of, we recommend that you set up alerts on your account so that, when there's withdrawals for certain dollar amounts, or you can set it up get really granular in terms of whether it's over a certain dollar amount or whether it's just every transaction of a particular type to be alerted to it by text or by email, so that you're really aware of everything happening on your account. And there's even some greater control services that can be put in place, like Positive Pay, which are an entire fraud detection system for both checks and ACH withdrawals. So, just understanding what your bank has to offer when it comes to fraud, because you think about it like, you think, oh, I'm small and, do I really need fraud protection on my account? But, this is your hard-earned money. And especially if you've just been starting a business and you're starting to see income come in, that would be just such a tragedy when you built this business from scratch to have it all kind of on the line without, proper fraud protection on the account. So that's the thing that I always mention to businesses, which is so important to know, even if you don't take any additional services in the way of fraud, is that businesses, as opposed to personal accounts, only have 24 hours in which to detect fraud. So you think like a consumer account, you have 60 days, and that's by regulation. It's something coming out of Dodd-Frank. Business accounts do not have the same protection. You only have 24-hour window. So essentially, by law, unless you've found it and then reported it to your bank within that 24-hour period, you could potentially be out that money. And when you think about businesses that do monthly reconciliations of their bank account and aren't, watching for everything and looking at every single check every time it clears, it could be at the end of the month when they're realizing, that a check cleared for the wrong dollar amount, and then you're kind of too late. So just to be aware of that is really important. The other thing that's, especially much more prevalent nowadays is credit card processing. So it's called merchant services. That's basically the ability to take credit cards for your business. So the way that it works is that usually you're working with a provider that is processing those credit card transactions for you in numerous different ways, depending on how your business is set up. So you could do it online through like a shopping cart where you're, somebody's buying something through a shopping cart and then it's processing that credit card. Or it could be, you have a reader and it's on your phone and the person gives you a credit card and it's read directly on your phone and processes that transaction. So there's all different ways that you can do it. But what happens is that credit card processing company, that merchant services provider, takes those payments and then directly deposits them into your account electronically. So you're kind of getting these daily, if you're processing credit cards daily, you're getting those batches of payments directly into your account. So it's very, attractive in today's day and age. I don't know very many people who don't accept credit cards. So it's really important to ask your bank as well about what they offer in the way of, there's independent companies as well. You definitely don't have to do it through your bank, but usually the bank offers their own, partner or offers merchant services in-house. And I would say of all the things to kind of cost compare, this is one of them that you want to do a little bit of diligence about how the service charges are calculated, because there's a lot of different ways and some of them are more opaque than others. So you might want to go with one where it's really clear cut in terms of how they charge you. It's usually off of a percentage of every transaction size. But there also might be monthly fees associated with it. So to really do your homework in terms of which processors charge which fees and at what rate and that kind of thing. And also whether, you're locked into a contract, so that might be a consideration, as well as whether they're going to give you an introductory rate and then they jack up your rates, some period of time afterwards. And so it's important to know that in ahead of time, because you might want to even check back with your merchant services provider after that time period. They might, if you ask them, they might say, yeah, we do that after 6 months. And then make sure you contact them in 6 months and say, can we revisit these rates? So there's many different models, and it's important to really understand your model before you sign up with a merchant services provider. How am I doing with that?
You are at 6:36.
Okay.
You have like 20 minutes.
So deposit insurance, what's really just important here is that on the business side, you receive FDIC insurance through the bank for up to $250,000 of deposits at that bank based on your tax ID number. So it doesn't matter. I mean, you could have, a lot of people say, oh, well, I have 5 different accounts and each one has 100,000, so I'm covered, right? And it's not based on the account. So you could separate as many accounts as you want, but it's really off of that one tax ID. So you, one thing, it's a great problem to have, if you have over $250,000, that means that your business is really flourishing and you've really built up a good balance. So it's a great problem to have. What I would say is that at that point, if you're concerned about it in any way, to talk to your bank, because there are different options in a lot of cases where you're not going to have to split up your money in a ton of different banks to get FDIC insurance, but rather different products that can offer greater FDIC insurance outside of what the bank offers just through, the one tax ID number. So it's a good question to ask at the point at which you have that problem, which is a great problem. But it's different than, on a personal level. It's really any business type. It's, it doesn't matter what kind of legal entity you are. It's any business based off of tax ID. Okay, I'm gonna skip this kind of quickly because this is not my area of expertise, but we obviously work quite closely with commercial lending. But just to keep in mind, there's a lot of different products on the commercial lending side that can really help you finance your business, whether it's there's different types of lines of credit, for example, some where it's more based on whether you have receivables and inventory that you're lending, we're able to lend off of the receivables and inventory that you have. That's kind of your collateral. There's also, a term loan if you're buying a piece of equipment, or if you're commercial loan, commercial mortgage if you're buying a building. So there's a lot of different options when it comes to financing. And the nice thing is that your bank will probably have, even if you're not at the point at which you're qualified for a bank loan on the business side, because your business is still kind of too small or too new, your banker will probably have a lot of resources for you in terms of programs that provide lending, micro lending, and different kind of quasi-governmental organizations and nonprofits that can provide some financing to smaller and newer businesses. So they can be really that point person for you in that resource, even if they themselves, can't finance you at your stage of the business. So it's really important, I guess, fundamentally, is to establish a close relationship with your bank. So even if you're not yet at the point where you're getting financing, you have a strong relationship with them on the business banking side, because the point at which you do need financing, they'll be able to work with you. They'll have your records of, how you've been operating your business account, and then kind of utilize that in consulting with you on, the timing that you might be pursuing a loan and what you might need from sort of compiling that information that they would need from a financial standpoint. So we talked about this a little bit already, but fraud, as I mentioned, is really something that we talk about so much at the bank. I mean, we see it every day, and I would advise anybody to sign up to, I'm sure Miri is going to make this plug for many classes, but to sign up to our Mutual Matters newsletter, because we've been trying recently, so there's Mutual Matters and Business Mutual Matters. We've been trying to put out a lot of content in terms of recommendations for, keeping your account safe and different fraud schemes that we've seen recently, so that you kind of get an example of what we're seeing, and then can, keep a special eye out for some of the kind of clever ways that these perpetrators are executing their fraud schemes. So that's, really important to kind of follow that type of news, because they're updates, and, as we're seeing things, we're communicating them to our customers. But, it's the obvious stuff that has not necessarily strictly anything to do with business accounts. This is really for your personal account as well. But, using strong passwords, not sharing passwords, as I mentioned, that being a really important thing, especially for business accounts. One other thing that I would make sure that you ask your bank when you're establishing a business account is if you're doing external withdrawals from the account, whether it's through a service called ACH origination, which allows you to push payments out of the account, or whether it's through an online wire transfer, again, where you're pushing out a wire transfer directly through online banking. Do they have heightened security so that, it's not just directly through online banking, but do they have some sort of additional layer of security and protection when you're sending out a payment like that? Because when you think about it, like if somebody could just hack into your account and send money out the door, that's really, really scary. So we, for example, have a special PIN that you have to put in that's a randomized PIN as an into the module in order to be able to push out that payment. So it's not just your user ID and password, but it's an extra step. So I would make sure that, your bank is not kind of permitting you to send out money without that additional layer. So those kind of controls can be even, better in terms of managing your business account. Making sure that you have antivirus on your computer that you're using for your banking. I mean, we actually even have the recommendation for those businesses that are pushing ACH payments or wires out of their account. We say, even if you can have a dedicated computer where all you do is access online banking. We understand that that's not very practical, but just that concept of what are you using your computer to do other than go into online banking, because you might want to kind of separate those activities so you're even greater protection on the account side. And don't use don't go to like a Starbucks and just use the public Wi-Fi that has no security and then be going into online banking and sending out wire transfers. Make sure you're on a secure network. So these are pretty basic things, but not clicking on links that you get. I mean, for example, I got something from a customer and it had an attachment, or another one was a link. And, I knew the customer, I knew the email address, all of it looked recognizable. But I just said, I'm not clicking on anything. And so I called her and I said, I know this is a silly question, but is this really from you? I don't want to click on this link until I know that it's indeed from you. So, it might sound silly to do the extra work of like, why do I work on email and then call in addition? It's just like double work. It can make a really big difference, because when you think about all the work that it will take if you have any kind of issue from a hacking standpoint. So just those kind of things. So I'm going to skip over this kind of quickly because we're going to have a dedicated subsequent class on wealth management with our head of our financial services team. So he's a lot more of a subject matter expert than I am. But one thing I'll just mention off of this is retirement planning and having a 401k plan or some sort of retirement benefit is in this, when you are thinking about bringing on employees and you've grown the business to that size where you are recruiting, it is, an attractive way to really bring in employees and retain them. We're seeing that, as I would say, more and more in this kind of, you've heard about the Great Resignation and all of the issues with keeping employees. If you can have a 401k plan or some sort of retirement plan for your employees that you can really tout as a benefit of being your employee, that might be a way to kind of differentiate yourself from some of the other small businesses that are also hiring from the same candidate pool. And the other thing that mentioned, some things like health savings plans, that's another thing that, depending on what kind of health insurance plan that you put in place, that might be something that is another way to provide benefits to your employees, and that the bank can have directly work with them to put in a plan in place in terms of a health savings account. Okay, so this is just kind of a quick wrap up, just in terms of really vetting the bank that is best for you based on several criteria. Thinking about it not just in terms of, who's the bank down the street, but really thinking about some of the considerations from a business standpoint, whether they're the right bank for you. It's sort of almost like Goldilocks, like some are too small, some are too big, and then you're finding the one that's just right for you. To really keep in mind that there's services that might not be right for you now, but that you can grow into. So, we have a full suite of cash management services, many of which, our new and small businesses are never going to use or not using at this point. But there's great opportunity once you reach that scale where, you are, maybe now you're only paying 2 vendors, for example, and, you can cut a check and it's no problem. It's really easy. But then once you have, 50 vendors, are you really going to want to be mailing all those checks and handling all the account reconciliation? Maybe that's when you want to start adopting something like ACH origination, where you can just send them out all, easily from a template through online banking. So again, just being aware that those things exist as you grow and making sure that your bank can accompany you with those. And then, fraud just being a really big issue and something that you're going to want to pay a lot of attention to. Again, the concept of a savings account or some place that you can kind of put money away separately, so that you have that money available to you for certain business related events. Again, financing your business, is perfect to have it separately in a savings account so that you haven't touched it just as part of your operating cash flow. Establish a really great relationship with your banker, because they're going to be the greatest resource for you when you are at that point where you're needing financing or needing some services. If you already have a direct contact, it's just makes it so much easier because they know you. I think that's all. Open up for questions.